In stocking up today, trader Tom White of Red Option Advisors has some food stocks to talk about. Good to have you on the show today.
Good to be back.
So let's start with Whole Foods. Whole Foods actually had a little issue over in Massachusetts. Some of its ready-to-eat foods might have had some issues. The company says that has been corrected. Is it affecting the stock?
Oh yeah, for sure. We've seen the stock come off of basically 3-year lows. It was down to that $28 level. We've seen it rally back a little bit. They're changing their whole outlook now, going to smaller stores. This 365 organic stores, which are a little bit smaller than the big stores. They haven't really seen anything out of that yet, but with this FDA investigation into just one of their facilities, if this rolls over into more of their facilities, we could see the stock test that $28 level again, which wouldn't be good, but that might be an entry point again. On the long side, if they get all this stuff taken care of.
And an options trade, would you do a put spread here?
Probably not. I would probably wait, kind of let this flush out, let the news come out. We've seen a downgrade in the stock this week already, just on the FDA report. But I would see kind of play out a little bit. If it gets down underneath that $30 level again, that might be a longer term buy for the shares.
Well, food issues, a beautiful segue into Chipotle, which is also trying to clear the air from the norovirus as well as the E. coli issues earlier. So what do you see happening in that stock?
Yeah, the stock broke down below that $400 share level this week. And what we've seen is they've got all the issues taken care of as far as the food contamination, but at the same time, customers aren't coming back. I used to go there all the time with my son. We're not going there as much anymore, and I think a lot of analysts didn't predict that it would take this long for customers to come back. I can kind of see the shares falling a little bit further. The valuation's high in there, as it was a big growth name over the last 5 years. If those customers don't come back and they start going to competitors like Moe's Cantina's getting great reviews, Qdoba is getting good reviews, so the competition's heating up in that space. And if the customers don't come back, I could see the shares staying below that $400 a share level. But at the same time, if the company does something like a stock split, which they're probably due for, something like a 4-to-1, 5-to-1 stock split, that'll get some interest back in the shares. It'll kind of dilute some of the shares a little bit. It'll make that float a little bit bigger and maybe put a little bottom into the shares.
And now for something completely different, JP Morgan, a banking stock. What do you think about this one? Will you take a bite?
Yeah, that's it's kind of odd. This is a big week. Along with the Fed, we've got the Brexit vote on the 23rd, and if you watch the banking stocks, they typically follow the rates. And what we've seen in the rates is they're almost at 3.5 year lows, but the banking stocks have kind of held up, been a little bit resilient here. And then also that Brexit vote's huge, and there was a report 2 days ago where one of the analysts said that the stocks over in the UK can go down anywhere from 25 to 40% if England leaves the EU.
Will that drag down U.S. banks as well?
Oh, I think so, for sure. And what that'll do is probably affect our Fed, where they're not going to raise rates in the July meeting. They're not going to raise rates in September, maybe not until after the elections in November. If that happens, based on the asset values that these banks have, and rates not going up, that's really going to contract their balance sheets, their profits and their revenue. So that happens, I could see JP Morgan slipping below that $50 or $60 a level, $60 a share level over the near term, if that does happen. If the Fed's not as dovish, moves forward, hikes rates in July, maybe indicates a September hike, we could see the shares go back to that $65 share level.
What about an options trade in JPM?
Yeah, so what we've seen is a lot of option volatility expand in that name. Ahead of the Fed, that it was really big. And then the Brexit vote's going to put a little bit of a bid into the shares also. So what we've seen is people aren't really taking a directional bias, whether it's going to go up or down. They're buying straddles. So they're buying a call, they're buying a put at the same strike in the same series, with the expectations that it could slip below 60, it could go above 65. So they're buying option premium because nobody knows where it's going to go.
They want exposure on both sides of this trade.
Correct.
Good to have you here. Thank you, Tom.
Thanks.